as Trump would say, he's too late.
Oh,
he's always too late.
Okay, there it is.
And actually, Trump did come in today also just to say that it was too late for Powell to signal a September cut. So very on brand.
Okay. Everything is on brand. He covered a lot of ground, and we got some of the highlights, the tidbits there. And it was also a very, I think, as Mike McKee talked about earlier, one of the reasons, according to reporters who were in the room, about why he was late is because he got a standing ovation when he came in, according to Mike's reporting. Oh,
because we probably won't be seeing much of him anymore.
Well,
at this event.
At this event.
Yes.
And he kind of alluded to that. He said, apart from a couple of years during COVID when I did this virtually, and he talked, he thanked Kansas City Fed chief for everything they've done. And what was your biggest takeaway? We saw what the market's excited about, but what were your big takeaways?
I mean, I think it's just amazing when you look at this amazing market rally that we've had in response, that it really is just because of these 4 words: adjusting our policy stance. Or really the couple before it, may warrant adjusting our policy stance.
And everybody says that policy stance is looser monetary policy?
Well, that it's going to be then that rates will be cut that will be the signal effectively. So those, what is that? 1, 2, 3, 4, 5, 6 words there. That is why your 401ks are doing really well today. That is basically the essence of the speech.
Well, we're definitely seeing a really strong showing here in the equity markets. We're looking at the Dow Jones Industrial Average up almost 2%. We're just seeing green all across the screen today. But I mean, of course, what has really been overcast during this time period is all the spotlight that's been here on Lisa Cook. And that's something that we've all really been focused on here. But I'm curious, what is the importance here of the Fed's independence?
Yeah, I mean, that's obviously something that central bankers at the Fed at this conference, as well as from all around the world who are also at this conference, are very much in support of. And that was a huge part of, coming into Jackson Hole. It was probably going to be a big theme of this, and that this is a concept that's really meant to be respected globally, and that central bankers take this really core to their mission of being able to operate free from the governments where they live. So this is it's something that Powell has made very clear in all of his speeches, and I'm pretty, again, on brand for him to stick with that today.
We heard from the Fed chair at the July policy meeting, and then we got the minutes earlier this week. And a few days after the meeting, we got the payrolls report for the month of July. And that kind of changed the narrative around the dual mandate, the maximum employment part of the dual mandate versus the stable prices part of the dual mandate. Did we get any insight from the chair as to how the Fed is thinking about the balance of that dual mandate right now and how that may have shifted since the latest employment report?
Yeah, this is what everyone was waiting to see, because a lot of people at the time had speculated that if Powell and the rest of the Fed had seen that July employment report before that FOMC meeting, which was 2 days before the report dropped, maybe it would have been different, the outcome of that meeting. And maybe they would have cut rates, or if not cut rates of that meeting, maybe would have at least signaled it more strongly at that point. But they didn't know that at the time. This came out 48 hours later. And certainly, as you said, Tim, our whole understanding of the labor market really changed that day. So Powell did allude to that, and that there are, certainly risks to the unemployment side of the mandate. And that's really where the opening the door to the September cut comes in, because at the same time, he's still saying that we have to be wary of inflation risks and that they're tilted to the upside, and being mindful of tariffs, even if he thinks that those effects are ultimately going to be short-lived.
Mm-hmm. And one thing that Powell really tries to do, he tries to avoid anything that would represent him weighing on, fiscal policy as opposed to monetary policy. We know that he really is squarely focused on monetary policy here. But we can't leave out the fact that tariffs remain a clear concern here for the economy more broadly. What are your sources telling you about how the Fed is really factoring in the effects of tariffs as we look ahead?
I mean, Powell's made it seem pretty clear that his base case is for tariffs to be a short-lived inflationary effect, which is interesting, I think, because, there was a time where I think he was maybe viewing it a little bit more balanced, or perhaps even more wary of it being of a more persistent impact. And which has then been interesting then if you are in the camp that you think that this is going to be a one-time hit to inflation, why you wouldn't be more open to lowering rates sooner. That if you are in the persistent camp, that would certainly lend credence a lot more to the holding rates elevated side of the argument So they're all definitely mindful of this. There are definitely some Fed policymakers who are more mindful of it than others. We had Beth Hammack of the Cleveland Fed come on CNBC after Powell spoke, and she had a very different tone to when she was talking, and she said that she is squarely focused on inflation right now. And remember, she had just said yesterday or the day before that if the meeting was tomorrow, she's not going to cut.
Mm-hmm.
I want to sit tight, Molly Smith. I want to bring in Eric Weiner. He's senior editor, Equities Americas for Bloomberg News. And also just take a quick look at the equity and the bond markets. The S&P 500 up 1.6%. The NASDAQ composite up 2%. The small caps, those interest rate sensitive, smaller market cap companies, up 3.8% as we speak. It's essentially the best cross-asset rally that we've seen, Eric. On the yield curve, we're seeing yields lower by about 11 basis points on the front end in the 2-year and the 5-year down 10 basis points. And we're also seeing the 30-year yields lower by 3.6 basis points right now. 4.88 on yield on the 30-year. The 10-year yield is 4.25 right now, kind of moving around a little bit. What was your big takeaway? Obviously, the market reaction is huge, but you're kind of smiling a little bit right now.
Well, like to Molly's point.
You're a little skeptical?
Well, I think that he said that they are going to cut rates, and it's not for a good reason. They're going to cut rates because the inflation is not showing up yet. And their real concern right now is growth and the labor market. And if you listen to what he said about rates, yes, he talked about it being temporary, but he also talked about how they haven't really shown up yet. So when you're talking about inflation, so if inflation is temporary, but if you think that the effect of tariffs is going to be usually a year to 18 months after they're implemented, we haven't seen what they're going to do. And in fact, if you think about it, most likely it will be the next.
Just because it's uncharted territory.
Right. It's new. The new Fed chairman, Powell himself probably will not be the one who handles this. That by next May, we will probably be seeing a bunch of this, but at that point, he'll be out.
And maybe a Kevin will be there.
Right. So we don't know. But it's not necessarily his problem. However, what the market is doing is taking back 5 days of peeling off of interest rate bets. So you had 5 down days in the S&P 500, fairly shallow days, but still 5 down days.
We're basically down 1.8% off of all-time highs.
So we reversed that. 25 basis points is cooked back in for coming up this next meeting. Mm-hmm. But from there, we'll see, because I don't necessarily know what the inflation reports are going to show, but a lot of company earnings were talking about seeing inflation in their results.
But they're eating it right now, Molly, and we're seeing that in the producer price index data. And we're hearing that from companies too.
Right. Yeah. I mean, Walmart said as much on their earnings the other day. Target, very similar messaging, and of course, you would expect that from retailers who cater to that kind of audience, but. You guys were just saying a minute ago, I wanted to come back to this of, maybe the next Fed chair, maybe a Kevin. We heard from Jim Bullard. He's also in the mix. He was on Bloomberg TV after Powell spoke. And he's out here saying, who knows, maybe we'll see 100 basis points of cuts going into next year. So that, just to map that out, if we've got 3 meetings between now and the end of the year, would be September, November, December. So one of those then would have to be 50 basis points, and the other would be 225s, presumably, which, if you remember, was exactly the pattern a year ago. And this is so funny because Trump, in his remarks in the Oval Office just a few minutes ago, in saying that Powell was too late to signal this September cut, also said Powell should have cut rates a year ago. And he did. He did cut rates by 100 basis points a year ago.
Exactly. And the last time he cut rates was December of 2024.
That's correct.
Or not him.
The board. Yes, that's correct.
Not him.
Not Powell. Right. Yeah. It's a collaborative process. But yes, the Fed did cut rates by a full percentage point coming into this year.
So one thing I've really been watching throughout this entire session has been volatility in the market, right? If you look back at the VIX index back in April when we were talking all about tariffs and everything, you're seeing it's spiking up to 52, the 52 handle. But if you look at today's trading session, right, we were sitting around maybe 16, but then as soon as Powell starts speaking, it just plummets and drops. We're now hanging around 13. Eric, how are you really analyzing this? What are you thinking when you really address the volatility here in the market for traders?
Oh, we saw it. I mean, we saw the chart. It's like a needle down. That's again the interest rate cuts. So if people were concerned about what the Fed was seeing, now you kind of know what they're seeing. You know that they're going to take out 25 basis points. They're going to take things down. What you don't know is where things go from here. And that's why, like, the next few reports, whether it's consumer price index, PCE, they are really key because that will determine whether what Bullard was talking about will actually be feasible. If unemployment continues to be a problem, but prices start really rising and showing up that way, the Fed's kind of caught. And it's hard for anybody to justify taking like 100 basis points out of the Fed funds rate when inflation is up. So we're right now in this limbo of not knowing, and that's what we're going to be waiting on, is what the data show.
Hey, we only have about a minute left. Molly, Norah said we're going to talk about the attacks on Fed Governor Lisa Cook, who did end up going to Jackson Hole. We have reporting on that from earlier this morning, Mike McKee as well. The president, basically at the same time that we were hearing from Fed Chair Powell, said that he would fire Lisa Cook if she does not resign. Can he do that? And what has been the response thus far?
Trying to remind myself on all of where the Fed governor's heading. I think this is one on the for cause.
Exactly.
Yeah. So yes, this does. I think that right. Thank you. Sorry, spaced out a second. From what I've heard from people, this does seem like it would be for cause. That if these allegations turn out to be true, that if this is really a case of mortgage fraud, then that would be a legitimate reason.
But I think you have a good caveat in there, which is if these allegations turn out to be true, because as of now they are only allegations.
Right, and obviously Lisa Cook is defending herself endlessly, that she has said that she will not be bullied into stepping down. She's looking into it. I'm sure Fed is. I'm sure she has a legal team that's doing so as well. So we'll see how this all shakes out.